So if you head over to my blog, boombustinvest.com, and go to invest and then core portfolio, I talk a little bit about the role of bonds in capital preservation and how they can protect against downsides in the stock market and busts. Actually, this content has all been kind of revamped, but there's still some good information there at the moment. So in this section, bonds and busts, there's a link here to the various types, another posts on various types of bonds that we've been talking about. So you can take a look at that. Again, this is all going to be rewritten soon, but so during the last financial crisis, Great Financial Crash 2008, I've just got some of the returns here that from peak to trough in that particular downturn. And as we can see, well, in this case, actually, sterling UK gilts, funnily enough, were the best performer at minus plus 18%, which is not what we're seeing now, which is interesting. I mean, every crash or downturn is different, I guess. But yeah, for some reason, that was the best performing asset class. Global treasuries, as we've been looking at in global aggregate bonds, so plus 14 and 10%. So again, what we're seeing is these two bond types just seem to offer the best protection, no matter what the kind of sell-off is, or not, no matter what the reason for the downturn, and therefore, it's probably the best way to get diversification, as you never know what kind of sell-off or crash is coming. So, for example, the worst performing asset class here was REITs, because the Great Financial Crisis was more of a sort of property-led crash, I guess, and that's probably why the REITs were the worst performing asset class. Global equities are down about minus 37%. The equity income, like dividend stocks, etc., were down 47%, which is also kind of surprising. But yeah, as we can see, aggregate bonds and global treasuries, US treasuries, seem to be the best bond funds to own